Welcome back for another top-notch video. This week, guys, we'll be talking about the week of August 10th through August 14th. As always, our channel is about, the top-notch channel is about stocks, TSP, and more. If you have a ROTH IRA or brokerage account, we like to talk about those things. For you guys that are in TSP, we talk about the C, S, I, and F funds and what those mean. And if you're in ROTH brokerage accounts or anything like that in the markets, we talk about the ETFs, IVV, VXF, EFA, and AGG. What these translate to is the S&P 500. They equal each other here. The S fund or VXF equal small caps. The I fund or EFA equal international markets, and the F fund or AGG equals bonds. We kind of do a general overview where we're sitting for the year, and then a technical analysis of this channel. If that interests you, please like, subscribe, or share. Really appreciate your comments down below, and really appreciate you guys watching. So for this top-notch channel, where do we sit? So as of last week, we were up 4.9%. We're almost up 5% for the year. Our goal is always to make about 8%, so we're doing very, very well there. Feeling very confident about where we sit towards the middle of August with 3 months to go in this year, especially with such the major losses we had back in March. We're doing very well now, up about 4%, almost 5% for the year. And where do we sit based off of markets? If we look at that, markets sit currently for the year, if we look at the C fund or IVV or VXF, currently the C fund is up 5% and the S fund is up 3%. So we are beating the equity funds of the S fund and the I fund pretty significantly. We're doing very well there, over 1% here. Fell a little bit behind the C fund just to mitigate our risk a little bit, and we are catching that F fund now that's been ahead of us for most of the year. We predict to probably pass that F fund for the year, but we'll have to wait and see. Doing very well there. So just these two funds right here that are ahead of us for the year, doing very, very well. Please like, subscribe, or share if you want to see our moves. We make them on Facebook and Twitter. Let's continue on with the analysis. As I mentioned, this week was an up week for our funds. So both our equity funds, the C and S fund, were up about 0.5%, whereas that I fund was up almost 2.4%. Huge upside for the I fund this week, really catching up, really exploded. We saw it kind of drift downward. We didn't know where that was going to go, and then it just kind of exploded this last week. So let's kind of go over all of our charts. So if you want to see those on a chart basis, this is what it looked like for this week. The start of the week was here at 0%, and our funds moved, C and S fund moved up like 0.5% here towards the middle of the week. They were down a little bit for the week, and then they popped up towards the end of the week there. And then that I fund really took off, as you can see, and the F fund did not do as well at all. Finally broke down that lower trend, and we'll kind of walk you through that moving forward. Just some general charts from Thursday. I just want you guys to take a very quick look at this. Tom from TSP Talk does these charts, does a very good job. Please check out his website. Basically what I want to show you guys is in the S&P 500 or that C fund, we're seeing some gaps here, and with gaps we typically see the funds come back to hit those gaps, so just be cautious of that. We have our June high here. We're getting very close to an all-time high here. Could see a possible pullback for our all-time high to come back and catch these gaps before we continue to move forward. Our trend lines here that Tom drew even show that it could move back quite a bit to try and catch those gaps before we move up higher. Going on to, this is this chart here, the C fund. So basically, like I said, very close to that all-time high here. Very, very close, hitting some resistance on our trend line here. And just be cautious of a double top here moving forward. I'll show technical analysis a little bit later on. For the Dow Jones, we do have one gap here, so keep that in mind. That is quite significantly lower. We'll have to wait and see where that is. That 50-day moving average moving through the 200-day moving average, and the 200-day moving average moving up. That is good things there. Our Dow Transportation Stocks, which kind of gives us a good view of where things are to continue and to go. As you can see, hitting some resistance here for an all-time high. Really exploded for the month of August. Just very high, very, very large increase without any pullback. So just keep that in mind. We saw that back here in May for the Dow Transportational Index, and then we saw a pullback here. So just keep that in mind. And then EFA, like I mentioned, we saw it break down back here towards the end of July, and we were wondering where that was going to go or what that was going to do. And it ended up doing very, very well for August. That first week of August and that second week of August was able to push ahead of the June high and continue higher. And then for bonds, this is a very interesting. We've had it just a slight increase every single week all the way up to mid-August. And then this last week now, August 10th, we saw a large decline. Came all the way back to the 50-day moving average. So that's very interesting. Huge open gap here for bonds. Probably a decent pullback that was needed after such a rise all the way from June. It was a very, very safe place to be for a while. And now we're finally seeing a pullback on bonds. If you guys have questions about those, please let me know. The next thing I want to look at is just a little bit of a technical analysis, or I'm sorry, just some broad charts and just some interesting information moving forward. So back in May 14, 2020, this is what our chart looked like for the S&P 500. These are our moving averages. Typically, this is price. When price is below moving averages, that indicates not good things to happen for our charts. You want the price to be above the moving averages for a bullish trend. We saw that again on a number of scales on a different bunch of years, 74, 87, 1998, 2002, 9, 11, and 18. So really a lot of very constructive looking charts, kind of waiting to see where things would go. You want to be very cautious when you see charts like this, and we were after that, just to be sure that you don't lose your lunch on like if it is a bear market, because sometimes you'll see it pop above here and then decrease sharply once again. But as we moved into August 14th, this is the chart we're looking at now, and these were these charts 2-3 months later. So look at the change here. We went through all those moving averages. The fastest moving average is on top again. The slowest moving average is going to be on the bottom here shortly. Very, very good chart, and all these other charts also improved for the most part, and we're up significantly for where they were at. And these charts, once we saw this change for a long-term basis, we were just looking at historical charts. Doesn't mean it will happen with this chart necessarily, but where did these other charts go after a couple years? And as you can see, a couple years here, this is 2 years, 3 years, 2 years, 3 years, a year, 2 years, 3 years. Large gains after we saw that come through and get above those moving averages, and it was able to stay above those moving averages. Saw a large percentage gain. So very, very interesting for our present day's chart. We'll have to wait and see where things go, but right now this is a very good chart for what we're looking at. Moving forward, this is another thing that I wanted to mention is typically in a bear market, which we see a lot of articles out there for bear market stuff, you're going to see lower lows and lower highs. We have not seen that since May. So since that May time frame, we've seen higher highs and higher lows, which is what we want to see here. We had a higher high here and a low there. Then this was a higher low, and then we saw a higher high, higher low, higher high, and hopefully like a lower high, higher low here, somewhere in this 3269 area or 3345 area. We'll have to wait and see with that, but this is a very good looking chart for a bullish perspective. So that's all the charts I have moving forward for our charts. Let's get into our technical analysis for our 5 funds. I know that's what a lot of you guys have been waiting on, so let's move right into that. So this is IVV, or the C fund for TSP investors. As I mentioned, moving averages are doing very well. These are our moving averages here. We want to see price, which is this line here, move above our moving averages. We do see that. We see a little bit of resistance with this trend line moving up here. This is on FinViz. See our all-time high here, and as you can see, we are very close to that. We might see a double top, so just be very cautious with that moving forward. We'll look at the technical charts in the future just to see where we look in regards to that. But overall, very happy with where IVV, or the C fund, sits. Let's take a look at it on technical analysis. For technical analysis for IVV, as you can see here, weekly charts, we have some really good things here. The 2 indicators we like to look at, which our indicators are down here, prices up here, is the derivative oscillator, which is these green bars and red bars. Typically when green bars go up, price goes up. When green bars go down into negative red bars, price goes down. When red bars come into green bars, price goes up. So we like to see that for our derivative oscillator. The other thing we like to look at is the PPO line, price percentage oscillator. And what we see there is that is the blue line. And when the blue line is above the red line, the moving average line, we see price continue to go up. And when it drops below that, price continues to go down. So we have 2 indicators that we look at, very simple charts. We look at long-term charts and short-term charts for IVV moving forward. If you guys have questions, write them in the comments below. But very interesting from what we saw here. So back in May, like I mentioned, we saw PPO line cross. We saw the derivative oscillator start to move up. Price moved up. Very good things we like to see. We lost one of our indicators in June, July area, which was kind of concerning for us and made us move our positions back and forth a little bit. So if you saw us move in and out of stocks for a little while, that was the reason why. We were concerned about the long-term charts for that derivative oscillator, moving from 3.3 back in early July to 3.1, 3.31 to 3.1 to 3.18. We saw an increase there, 3.66. So in middle of August, we really saw that increase, and now this week, which is 4.15, really, really good here for our derivative oscillator. This is what we like to call a fake out. Usually lasts a little shorter than the actual run, but we want to be involved in stocks when this continues to increase. So that is a really good long-term indicator. Our PPO line is way above there, so that is also a very positive sign moving forward. On a short-term basis for charts, what do we see? We see IVV here. The PPO line did just cross over this last week, so that is in the negative. I'm not super concerned. We have just been faked out so many times in the past here. We have moved every single time this chart has gone down, from moving from the 22nd of June to the time in July, the end of July, and now here in August, and every time we've been burned on it, and we've continued to lose percentages. With long-term charts now positive, like I mentioned, that derivative oscillator is up. We're going to continue to kind of drive in this train and continue to stay in stocks so that we can gain those percentages. We might take a little bit of a loss here, but I don't think it'll be much. Moving on to VXF. VXF is also doing very well. Moving averages are increasing, all in the right direction. Things look very bullish here. Coming close to that double top. We'll have to wait and see where that goes. Be cautious of that moving forward. Moving into long-term charts on a technical analysis for VXF. Where do we sit? Again, derivative oscillator going down here. We saw it go down. That was concerning. Price continued to go up, so that's very odd for us. Usually we see the opposite. We were hoping to see it go down in this area and make a little bit of profit. Did not happen. Moved a number of times in June and July. Lost a little bit of our percentage in stocks. We were above the markets for a while, so we had that room to play around with it, and we were okay with that. Taking a little bit less risk for a little less profit. And now we saw a switch on the derivative oscillator from 3.4 to 3.7, and this week 4.0. So really big increase. There is a fake out here. PPO line is above. We're really happy here. This is the Bollinger Bands. Usually price likes to stay in the middle of those. It's right in the middle. Really good sweet spot. We're going to continue to drive the train on VXF. Stay in that stock fund for right now moving forward. On a short-term chart, where do we look since we're getting close to that double top? As you can see, this is also a little concerning here. That PPO line did drop below here. We're hoping to see that come back this week. A lot of indecision here for market participants. As you can see, spinning tops. Usually that means a lot of indecision, not knowing what to do. Spinning top, spinning top, spinning top, spinning top, spinning top here. So we're either going to see this thing break out, or we're going to see this thing pull back a little bit. Either way, we're willing to just kind of stick through charts, since we only have 2 moves per month, and we already used those 1 move for the month of August going forward. So that is the S fund, or VXF small caps. Now we're going to move to the international markets. This was our best performing fund this last week. Really interesting. We were above that 200-day moving average here, and then we dropped below it. Very, very concerning to see that. Popped above it again and then dropped below it once again. Very concerning. Not something you want to see on a bullish chart. And then we were able to pop above it this last week. August has just been a killer month for the international funds, doing very well. Hopefully it can stay above it this time. We want to see it get back into its trend line to really get involved or invest or move funds into this fund. Let's look at it from a technical analysis for EFA long-term charts. Where do we stand? Again, that derivative oscillator was dropping down and has continued to drop down. That's why we haven't got involved in it. Still, this is one of our 2 indicators, so we're just concerned with that. But as you can see, we were at 2.86 here, and now we jumped up. This is the first week we jumped up to 2.92. We're above our moving averages. Things look good. PPO line looks good. This might be a fun to get involved in maybe next week. Make a short-term move into EFA. See that as we see the international markets really start to come back as coronavirus starts to kick down in the worldly spectrum of things. So very interesting there on a weekly chart. Be looking for a move maybe in the next 2 weeks into EFA for a good move into this fund. On our 4-hour chart, though, the one thing we don't like is we're seeing the derivative oscillator drop quite significantly. So the next time we probably get involved in this is when it starts to come back up again, somewhere around the 4th or the 5th of August. Really good run here in August, as you can see with price. The PPO line is also starting to get really close. So I wouldn't jump into this just yet. I'd wait a little bit. Now that we have our first positive sign with this chart, we'll have to wait and see when it starts to make its move back and then get involved in this fund. And, of course, our last fund we're going to look at is bonds. Really interesting with bonds here, guys. So we got this short increase all the way through, I would say, May, June, July, and it looked like we were going to beat the double top. The moving averages all looked in the right area, hit that double top, and then we really started to decrease this last week here in August. Came back to the 50-day moving average. Hopefully it will hold here. Have to wait and see. If we look at it from a technical analysis, long-term charts, let's take a look at bonds. And the reason bonds are doing that is because yield's starting to increase again. That is really interesting. As you can see, guys, really interesting here. We had our PPO line drop below our average, our moving average line. So that is a really bad sign here for bonds. Had our first negative week here in a while. We had that nice weekly fake out here, which was great, and then we saw it drop off here. So I would be very cautious to get into bonds right now. I would probably stick away from that for right now on a long-term basis. And then on a short-term basis, where do we see charts looking? We have been under since all the beginning of August, so it hasn't been our PPO line has not crossed that moving average line in a while. It looked like charts were kind of just bobbling back and forth because this moving average wasn't able to get above that. Then we lost our second indicator, which was our derivative oscillator. Saw some negative fake outs here, and we do not like to see negative fake outs. There's one there, and there's a second one there, and it really took off after that second negative fake out. Really started to decrease here, really started to decrease here moving forward. That's all of our charts for this week, guys. I'm going to bring you back to our main screen here. And basically, where does the Top Notch channel stand? We are currently in stock funds. We have 40% of our portfolio in the C fund, or the S&P 500, or IVV, and 60% of our portfolio is in the S fund, or VXF, or small caps. We are a 60-40 portfolio, all 100% invested in stocks right now. Feeling very good about stocks. Kind of cautious about that pull-up, looking for those double tops. We will definitely put our moves out via Facebook or Twitter if we have them. Be looking for us to maybe make a quick move into EFA since it's starting to do a lot better, and stay away from the F fund or AGG at this time. That's another top-notch video. We'll see you guys next time.